Good morning, everybody. It's the 20th of September. We are Signal Centre talking ball with our full complement of me, Joe Neighbour, and Steve O'Hare. How you doing, Steve?
Very good, thanks. Very relaxed from a week away in Cornwall.
Lovely.
Oh, well, actually 10 days it was, wasn't it? So
Yeah.
much more than a week. Yeah, really nice, really relaxing, and still haven't managed to get up on a surfboard, but I didn't try, so that's probably one of the reasons why.
Well, if you
The
don't
bod
try, then you can't fail, can you? So
Yeah, exactly. That's how I feel. The bodyboard was okay. Hard work though.
yeah,
Um, yeah, really good, really good.
nice.
Enjoyed it.
All fun
The
and games in the
markets.
market in your absence.
Yeah, it's just like, well,
It's always the way, isn't
even
it? As
this
soon
morning.
as someone
Yeah,
goes away, it just kicks off.
yeah. Been the main driver of it? Is it? I see there's a few Chinese concerns, especially with
Evergrande.
the property. Yeah, yeah. Evergrande, is it?
Evergrande, yeah, I'm not sure how you say it, but yeah, that is certainly front and centre. And in terms of the other headlines, we've got the energy situation kicking off as well. UK energy companies are now looking to seek a massive government bailout as a surge in gas and electricity prices threaten to push suppliers out of business. So I think a number of these smaller companies have already hit the wall as a result of this. Um, the UK
It felt
government
a
is
bit.
set
Oh,
to,
we felt a bit flooded with them anyway, didn't we, Joe? It's
yeah,
sort of like
maybe.
every
So
week
just
you're
be
getting.
consolidation of some of these companies. But one thing to add, I mean, it's obviously a heavily regulated industry, so consumers are protected up until a point with this stuff anyway. So I know it is going to start pinching, people's pockets, but I think there is, I think we're okay with there being a sort of full scale disaster as a result of it, but. Time will
Mm,
tell, I guess. So, Boris Johnson and his crew have got emergency talks today with the industry after saying suppliers are under pressure. And the unprecedented surge in natural gas prices is a temporary problem, according to Boris.
thanks for that,
So,
Boris.
yeah, cheers. Um, what else we got? Yeah, so the Chinese real estate situation, that's what's rippling through markets today, pummeling Hong Kong developers and adding pressure on officials to prevent financial contagion. So Evergrande is one of the biggest, I think, real estate companies in the Far East, and they were off like 17% or so, and potentially failing, and that's having a big knock-on effect elsewhere. Um, so yeah, that's going to be
Yeah,
front and center this week by the looks of things. And of course, we've got Fed meeting later on in the week as well. Although it's a pretty empty calendar today. On Wednesday, we've got the Federal Reserve meeting, and there is expected to be chat around tapering, which the market might not need at the moment, given how things have started off today. But I guess that's a decent segue into the charts then, Steve. Obviously, you've been away, so I don't know how much chance you've had a look
had a little
look
bit
at
of a
various bits.
yeah, had a little bit of a browse through this morning, really. Just obviously the indices caught my eye, but I suppose really the best thing to do is to really focus on the weekly and the daily charts, as this Monday morning has been a bit of a rip roarer overnight.
Yeah.
This negative sentiment has continued. Yeah, just talking about Evergrande, just looking at their share price. I mean, this is the chart.
Weekly chart as well. So this
Yeah,
isn't something
so
new, is it? That's been boiling under for a while. Looking at the way
absolutely.
that ski slopes developed over the last
Yeah, so
few
a
weeks.
93% drop
How's that?
since
Oh,
2017. So that's not
wow.
good. But more, maybe sort of like more relevant is the drop since the recovery. So we had this, obviously, the sell-off from the start of the pandemic. We had the recovery up until sort of, when was it? July 2020. So within about 12 months, we've seen a 92% sell-off in that.
Wow.
So yeah, was one of the biggest re, property
Real estate
developers,
companies. Yeah.
real
Not
estate developers,
anymore.
but not anymore. Definitely not. I suppose really for us, from a chart perspective, this was the warning sign, and we could go back to maybe early July, really, and that the break of the swing low from the pandemic panic. Um, was the real sort of indicator for us. That's like a break of like 976, and that was a sign that worse things would come. And you've got a lot of news over the last couple of months of insiders selling. So that's like, I think there's private individuals hold about 76% of this stock. no, actually more than that. I think it's more about 80%. There's one guy owns 76%. He's the chairman. He hasn't obviously been selling, but his wealth has taken a bit of a hit. Yeah, I think it's but mainly a liquidity crisis. They've got sort of like bonds and payments to make, and they haven't got the funds, and they're struggling to get them. So they let's see how that plays out. Definitely want to keep an eye on. Does it have an impact on the China 50, which is one that I've been talking about keeping an eye on for a long time, and that's obviously getting close to some crucial levels as well. We'll start with the weekly chart on the FTSE, and we basically turned around really from 72.35. That's the week the yearly high, and this is like we're into the fourth potential negative week. Support coming in at 68.10.
I don't know if it's relevant, but I have got my chart on a log scale chart,
Yeah,
and had a trend line coming in basically here from the
on a weekly.
lows. Yeah. So yeah,
I mean,
that's what I've got there. So
yeah,
looking at that key swing low you've got already highlighted a blue line,
yeah,
marrying up with that trend line.
yeah. 67.35 probably this week it comes in. Next week it'll be a little bit higher than that, 67.60. And you know, the week after, so like 3 weeks from now, 4th of October week, if we manage to sort of like maintain these prices around these levels or slightly lower, then that'll be key. And again, you've got the congestion back here from the earlier in the year as well, that we can sort of like think about. You know, there'll still be some sort of support. So it's not panic stations yet, but we're not far away from it. Maybe a shorter term potential trend line coming in around here.
Yeah, I
That's
had that one
broken
as well.
clearly,
Yeah.
and that's like really nicely lower. So potential for this hit today or the next couple of days anyway. On the DAX side of things, again,
How's
we sort of
DAX 40's first day of trading?
yeah. In my head, I thought, oh, they've got another 10 indices in there. Surely it'd be more valuable. But obviously, it's an index. It's like based on the basket of the share price, and straight away it's like off 300 points. Doesn't sort of like look too good.
No.
But yeah, we've got basically a double top formation formed by these two highs, which broke. This was on the 8th of September, and then retested, came up to this previous swing high level around about 15,800, and that proved to be a step too far for the bulls, and they've collapsed. And obviously we've broken down below the 9th of September swing low, which is 15,450, and it's extended aggressively lower, still under a bit of pressure, but a little bit of time for the rest of the day for maybe prices to get back above the sort of 15,260. But it feels like maybe that we haven't even seen the sort of worst of this yet. It's still got the European session waking up. Maybe the US can come in and save the day, who knows. But the double top formation had a measured move target of 15,230, and that's obviously been hit this morning. So pretty nice work there. On the 560 support, which was from the 19th of August. And you can.
You're breaking up a bit, Steve.
Am I speaking too quickly for the computer? Maybe that's it. We have a level to watch right now. That was a previous swing high. It has turned into support, but has been breached around here. On the Dow side of things, again, we've broken through this support line, and prices have extended lower, and really looking for next support coming in around about 33,738. So another 300 points, 300 to 400 points lower than this. But because we've broken this level around about 34,600, for me, that's negative. So I wouldn't be looking to buy dips at the moment until we see some sort of reversal on the short-term chart. Nasdaq still holding on to this support level here, coming in at 15,183, looking threatening though. to
We've
sort
got
of
to
like
break a
push
trend
through.
there. That trend line you've got, if you.
Yeah, I mean, we could draw this trend line here, definitely. That would have been a nice trend line drawn or updated from last week's price action, and just breaking down below it. So get through this horizontal support line, then again, we are under pressure. So oversold, but obviously, but I wouldn't sort of like bank on that to save the day. Again, we've got further support. There's a supportive trend line coming in here. Let's get rid of this larger one. 1, 2, 3 points. So trend line at the moment. Where we're going to end up on the day, is it going to bounce off here? Again, oversold, but nothing seems to be slowing down at the moment on the indices.
No.
Aussie 200 under pressure. Again, that's broken below the 73.45 this morning, closed below there on Friday and extended lower. And really, we've got support coming in at 71.78 horizontal support, which has sort of like stemmed the flow a few times here. We've got 4 or 5 points, so it'll be definitely be a better trend line, horizontal trend line to watch. Even from the longer term perspective, though, can't really sort of it has broken that upward trend quite nicely, quite aggressively. So this is the one I continue to watch. Maybe look at it on a weekly chart, and that we've been here before, July, August, and all the way back here, July 2020. For me, if we can get a break of this low here, 14,500, then we are in serious trouble. We could even sort of like say there's some sort of resemblance of a head and shoulders formation here. But then the neckline here needs to be broken. That could open up a pretty decent, let's get it on a log scale as well. I mean, we've still got trend lines coming in. Oh, I have to redraw that one. Still a long way off the this trend line here, potential trend line, potential support coming in around about 12,450. That's 2,000 points away. But yeah, I think if we do get a break here, there'll be panic selling and stops below this level, 14,500. That's the level to watch on the index, the China 50. Crude oil. It's a bit disappointing yesterday. Got out of Loughborough, drove to the first petrol station to fill up, and I was charged 155 for a litre of fuel, which was really annoying because they had like unleaded, then they had the super unleaded, but all the unleadeds were all covered up with a little sort of like thing, oh, we've run out of this stuff.
Oh, really?
You've got to pay for the expensive stuff. 155, I mean, that really hit the pocket, mate, tell you. So I took it out of Connor's savings. Yeah, so oil. So I've been away for a little while. So we've seen this. Basically, this is obviously the weekly chart. I put it on the monthly chart to sort of like highlight this formation, evening doji star formation. It's trying to fight back on this side of things, but really we need to sort of like get above the $74, $75 mark for me to sort of change my sort of attitude towards oil. I still believe it is bearish, but it's not going to be a straightforward thing. We had price action from the 16th of August week, and since then we've sort of been pushing higher. Got up to $73 last week, but back down to 75 now. So seen a bit of a loss there. Similar sort of price action in Brent, but we are still holding below this long-term trend line. Again, what does the log scale look like? Yeah, a bit further away. Yeah, so this for me, we're at sort of key levels on oil. If it fails here, then I do believe we're going to have another swing to the downside. Natural gas had a big spike up last week. We got up to 568 or 569, but that's a shooting star candle. So maybe Boris is right, you know. He said
Temporary.
it's only temporary. So yeah, if we close sort of like below the $490 this week, then I'd be thinking, yeah, maybe he's right. On the daily chart, we've seen a couple of
It's just
shooting
a flush
stars.
out of companies, is it?
Yeah,
This company's
exactly.
getting stopped out at the top there.
Yeah, it feels like it, doesn't it? Um, Gold, before I went away, had this. We had the retest of 1835, and we got back below the obviously the 1790 to $1800 level. For me, is pretty pivotal at the moment. Bearish below there and bullish above 1835. Didn't manage to get above there, so another nail in the coffin for the longs. Yeah, and it looks primed for maybe another sell-off this week. Shorter term price action, really probably looking to sort of get set shorts around 1775, 1780 at the moment. Looking like a little bit of a bearish flag potential on this recent price action over the last few days. Momentum stalling a little bit after hitting 1742 and just like getting above 1750. But yeah, as we know, the sort of other levels to watch, 1723 below there and 1680, which is the real sort of support that we need to test again, in my opinion. Yeah, I think that's pretty much covers where we are.
Do you want to take a look at Bitcoin?
Cryptos,
Yeah.
yeah, little look at Bitcoin. So we got up to, when was this? Just before I went away, 53,000 stalled there, had that huge sell-off back down to 42,700. And it stabilized
Breaking up a bit, Stevie.
Okay, mate. Do you want to take over?
Yeah, sure. I'll take a look at Bitcoin. So let's have a look. So last week we were sort of pushing a bit higher in Steve's absence. We found some decent support of 42,830, but in the last couple of sessions we have started to see Bitcoin trade a bit more like a risk asset, and obviously some selling has taken place. For those who watched last week, I wasn't overly convinced by the move up because the volumes were really low on the bounce, which is always a bit of a telltale sign, really, that there isn't a lot of participation in it. And that any sort of big moves to the upside can be potentially faded. So we're back looking at this level again at 42830. If that breaks, then we could spark more selling pressure towards this key 30,000 level, which seems, a very long way away. But as we know, things can pick up pretty quickly when it comes to Bitcoin. So keep an eye on this. I think while it's above that, there is still potential for it to continue ranging. In quite a tight range in the short term, but 42,830 is the key level for me to watch today and in the coming week, really. So that's it on Bitcoin. Let's take a look at FX. So dollar index, hardly surprising given that we've seen a bit of a risk-off move, that this has been moving higher. 3 consecutive days of big green candles. Obviously, long way to go today, but we're into this resistance level at 93.43, which is sort of the first line that I've been looking for. This was his previous swing high from March. And if we can get above this 93.73 level, then it looks like we are going to continue higher up to 94.74, which is the next high that we saw back in September 2020. So continue to trade in a bullish trend channel. And for me, I like that. I think dollar index has got more to run, especially with all this uncertainty. With regards to what's going on in China, coronavirus, energy prices, and now potential of tapering being chucked into that this week as well. So could be a bit of a perfect storm really for risk assets this week. Looking at Euro USD, that is obviously moving lower again in a sort of mirrored fashion what we've just seen on the dollar index, but in reverse. So it's three big red candles have been posted. We're into this first support level, which was this previous swing low from back here on the 31st of March. That's at 117.04. Below that, we've got this move, this sort of fake move lower, which ended up provoking quite a sharp rally, but it looks like we're going to be retesting that again pretty soon at 116.64. And if that gives way, then we've got a pretty sinister looking head and shoulders top pattern, which I think will be more than complete at that point, and we can start looking for medium term to long term prices down to this kind of zone, which is at 110.56. So not looking particularly healthy for euro US dollar at the moment. Looking at some of the riskier assets today, because it is a risk-off environment. Aussie yen continues to sell off from rallying into this big area of resistance. No sign of that slowing. We've had quite a few consecutive days of selling now, so the next target on the downside is at 77.89. Aussie dollar, similar situation, rallied into this resistance zone. 3 consecutive days of selling. Morning dogs. And we're heading down to 171.06, in my opinion. If we look at cable, that continues to trade below this short-term downtrend line. Yes, we had a little bit of a poke above last week and above the 138.91 level, but it didn't hold, and we posted a big up reversal candle, and now we've seen 3 consecutive days of selling. So looks like we're going to go on to test this key support down here at 135.83. If that gets taken out, then you could argue that we formed a bit of a top here in cable as well, and lower prices can be expected. Sterling yen was looking quite interesting. Daily chart, 2 big levels of support here at 149.05 and 148.53. So it looks to me like we're forming quite a large top here. And if we take out these 2 levels here, there is a lot of fresh air for us to target on the downside with this one over the medium term. So not looking particularly healthy on that front. So be very careful, I'd say, if you've got any long exposure in that pair at the moment, because it's getting pretty close to a big make or break level. Looking at New Zealand dollar, US dollar, again, as you'd expect from a risk off move, you've seen this rally into resistance. It was sort of holding around here and outperforming the likes of Aussie, but now we've started to see the selling take place here as well. We've seen 3 consecutive days of moves lower. And for me, I think we're heading down to this 68.05 level. So all in all, looks like a big risk-off event. How long it will last, nobody knows. But we've obviously seen dips bought pretty aggressively when it comes to indices over the recent months. And I think that'll be a crucial test for market participants at the moment as to whether or not they've got the appetite for any more of it. What do you reckon, Steve?
Yeah, I mean, I don't know. It's sort of like I think this week's quite crucial. We've got to sort of like see some steadying of the ship coming in across the board, and I don't know. I always feel when it gets like this, I always feel a little bit negative.
Yeah.
I am a sort of like a bit of a stock bear. So,
well, as I was saying while you was away with these stocks, we're just looking at like 38.2% fib levels on some of the major indices. They're still quite some way away. But a pullback to a 38.2 level is healthy in the grand scheme of things, and will just create value for people that aren't in the market or looking to put fresh capital to work. So, I'd like to see that, I think, at some point, because I just think a decent shakeout would be good for everybody. Obviously, not if you're balls deep long, but
yeah. Well, where do you put your money though? I mean, do you stuff it under the bed? Is that the idea?
you just got to be patient. Just wait. There will be opportunities.
Yeah, but you stick it in cash, you're losing money with inflation. So yeah, I don't know. It is sort of from an investment perspective, everything seems to be sort of like the illiquid sort of investments seem to be the more attractive ones. Although my son Cameron was mentioning the what's the digital things that they're doing.
NFTs.
Yeah. Just talking about all of them and showing me a few of those at the weekend. Some of them looked quite like good opportunities, which is a bit of a worry.
Sucking you in. Yeah.
Yeah, exactly. Yeah, so still, I still got to do a little bit of research. No, I still got to do a bit of research on those. But I think, it's one of those like emperor's clothing stories. I think you'll sort of like realise, not having the original, but having a carbon copy of the original, maybe just as good. But, it's I think they're trying to convince the younger generation of traders that it's art you're buying.
Yeah, helping all these artist. Who knows? Right, gun to the head challenge. So
How did
managed
you
to
do
land a
last week?
whopper on Friday. Got a
Get in.
3.23R win on S&P. Was looking a bit sort of precarious. I was down 2R actually in your absence, but managed to claw it back to now finish up 1.23R while you
Nice
was
one.
away. So that's always good.
Obviously,
Um,
I'll have to go back over the videos just to check.
Yeah, you can feel free to do that. I was all in on the S&P. It was going really nice. Had a couple of wins, then I had a loss and sort of lost faith in it, and then went
Oh,
back
you
for it again
nailed
and
it.
caught one.
Lovely.
Yeah, so that
Brilliant.
was nice. And yeah, Mona, our analyst who does the S&P, US markets last week, she had a cracking
Gonking one.
week.
Did
Yeah,
she?
really, really
I
good.
saw
Yeah,
she nailed the Dow at the high on one occasion, right at
she
the
had
open.
Nasdaq on Friday as well. I think for a 3R win.
Lovely. Nice one.
Yes. Okay, so we've got to pick some trades, Steve. I don't know what I fancy at the minute. I don't know if anything's caught your eye.
I'm sort of tempted to sort of like go with the US indices, going to sort of like try and capture a little bit of our in the short term. But I think the stop's got to be quite a way away.
That's the problem now, isn't it, with these big
Yeah,
moves?
yeah, it's had the big move, and now we're sort of like maybe I might go China 50. China 50's,
China.
yeah, China. Let's sort of like preempt the break of this line. That would be good. And we can have a quite a tight stop on this, not quite that tight. So it's trading around about 14,700. We'll have a stop at 14,800, and we'll have a target of 3.5R, 14,349.8. Yeah, so that's my going for the China 50 to collapse
Okay,
as the market's open.
nice. Okay, I'm going to take a look at oil. So conversely to what you were saying, Steve, I know you were bearish because of these big sort of factors on the longer term chart, but this is my daily chart, and I was more of the opinion that this was maybe a flag. So we've seen things moving higher, bit of a consolidation, bit of a break to the upside, and now maybe a bit of a pullback
Right.
on a short-term basis. This is the daily chart. So just zoom in on the hourly just to get maybe a more of a refined entry point. So I'm going to try and buy that. I think if there was a gun to my head, that would be what I'd be doing because I can't see an awful lot of value in anything else given the big moves. So going to get involved at 70.75 on the upside. Sorry, buying. Target is at 72.60, and I'm going to place a stop at 70.25, 3.8R.
A
It
nice
feels like I'm
one.
just plucking that
Good
out
one.
of the air, but
Yeah, a
we'll
bit like
see.
myself. So yeah, I won't criticise you too much for that.
Thanks.
You've got a gun to your head, mate.
Yeah, exactly. I'm just trying to justify it now after I've said it. Yeah, look at that. That'll do.
That'll do, donkey.
Okay, right. So there's two trades. In terms of news today, there isn't an awful lot. In fact, there's nothing that's considered high impact on today's calendar. But all eyes will be on the Federal Reserve meeting on Friday and what that may bring. Expected to signal a move towards scaling back on stimulus. There's a few meetings going on today. I think Boris Johnson's meeting Jeff Bezos. He's going to tell him he has to pay his taxes. Good luck with that. And obviously, we've got these ongoing situations with COVID, energy prices, and Chinese real estate. So, promises to be an interesting week, I think.
Yeah, very exciting.
Cool. All right, let's wrap it up there. Glad to have you back, Steve. We'll be back tomorrow morning. And until then, trade safe, everyone.
Cheers.
Bye.